This week, April 28th to May 2nd, the US stock market roared back, erasing April's losses with a historic winning streak. From big tech earnings to tariff breakthroughs, we've got the full scoop. Whether you're new to stocks or a trading pro, this video will break down the 5 biggest stories shaking Wall Street. Hit like, subscribe, and ring the bell to stay in the loop. Let's jump right in. Hello, and welcome back to the Stock Bro, where we cut through the market noise to deliver clear, actionable insights. This week, the US stock market was a powerhouse, with the S&P 500 logging its longest winning streak in 2 decades, and the Dow extending its best run of 2025. Fueled by strong jobs data, blockbuster tech earnings, and hopes for US-China trade talks, stocks erased April tariff-driven losses. Whether you're just starting out or managing a hefty portfolio, we've got the 5 key stories that defined this week's action and what they mean for your money. Grab a notebook and let's dive into the market madness of the past week. First up, the market was unstoppable. The S&P 500 and Dow extended their winning streaks to 9 and 8 days respectively, with the S&P 500 climbing 1.5% on Friday to close above its pre-tariff levels from early April. The Nasdaq wasn't far behind, rising over 1% on Friday, powered by tech giants like Microsoft and Meta. According to Bloomberg, this marks the S&P 500's longest winning streak since 2004, a massive rebound from April's tariff-induced sell-off. But what sparked this rally? 2 big drivers: a strong job report and tariff relief. On Friday, the labor market reported 177,000 jobs added in April, with unemployment steady at 4.2%. This eased fears of economic slowdown. Meanwhile, Commerce Secretary Howard Lutnick's comments about a near-finalized trade deal boosted optimism, especially after China signaled openness to talks. Stocks surged as investors bet on calmer trade waters. For new investors, strong economic data like job reports can lift markets by signaling growth. Tariff relief reduced costs for companies, boosting stock prices. For experienced investors, this rally's momentum is strong, but overbought signals are already flashing. Keep an eye on RSI levels and be ready for a potential pullback. Let's talk tech, because big tech's earnings were a game changer. Microsoft and Meta crushed expectations, driving Thursday's market gains. Microsoft's AI investments paid off, with robust cloud revenue, while Meta's ad sales soared despite tariff concerns. Reddit also made waves, with shares jumping 5% in after-hours trading after strong revenue and upbeat guidance, thanks to its AI-powered Reddit Answers platform. However, not every tech stock sparkled. Snap tanked nearly 15% after declining to provide a forecast, citing macro uncertainties. Still, with over a third of the S&P 500 companies reporting, first quarter earnings are up 12.9% year-over-year per LSEG data, smashing the 8% growth expected in early April. This week's tech wins set the stage for Apple, Amazon, and others reporting next. For new investors, earnings show how healthy a company is. Strong results like Microsoft's can lift entire sectors. For experienced investors, tech's driving the market, but selective weakness in stocks like Snap suggests rotational risks. Make sure to watch Amazon's report for e-commerce tariff exposure. Trade policy was front and center again. After April's chaos, when Trump's 145% tariffs on Chinese goods triggered a 6% S&P 500 plunge, investors got a breather. On Tuesday, Commerce Secretary Lutnick said a major trade agreement was close, lifting the Dow 300 points. China's statement on Friday that the door is open to talks further fueled optimism, sending stocks higher and gold prices to a 2-week low as safe haven demand faded. But it wasn't all rosy. A disappointing GDP report showed the US economy shrank 2.7% in Q1 of 2025, the first contraction since 2022. Consumer confidence also hit a 5-year low, at 86, down from 92.9 in March, raising recession fears. Economists warned tariff could worsen the slowdown if talks falter. Remember, trade deals can calm markets, but weak economic data like GDP signals caution. Economic data paints a mixed picture. While Friday's job reports was a win, other indicators raised red flags. Job openings slid to a 4-year low in March, signaling a cooling labor market. The Conference Board's Consumer Confidence Index fell for the 5th straight month, with the expectation index dropping to 54.4, its lowest since 2011. This spooked investors midweek, with the S&P 500 and Nasdaq dropping 1.5% and 2% after Wednesday's opening bell. Despite the gloom, stocks recovered by Thursday, buoyed by tech earnings and tariff hopes. A Reuters poll of economists highlighted the tension. 92% said Trump's tariffs hurt business sentiment, and 75% cut their 2025 global growth forecast to 2.7%, from 3%. Yet markets shrugged off the pessimism, focusing on positive trade signals. For new investors, markets can bounce back from bad news if other factors like earnings are strong. For experienced investors, sentiment is sour, but contrarian opportunities may emerge. Low consumer confidence could signal a buy window if trade talks hold. Let's wrap up with the week's winners and losers. Dexcom surged 16.2% after topping revenue estimates and announcing a $750 million buyback, leading the S&P 500 gainers. Boeing climbed 2.5% on Monday, capping a 5-day rally. On the flip side, Snap's 15% plunge and GoDaddy's downgrade due to valuation concerns dragged on tech. Warby Parker also struggled, down 35% year-to-date. Next week is packed. Apple, Amazon, and Pinterest report earnings, and the Federal Reserve's interest rate decision looms. Trade talks will stay in focus, with any hiccup potentially derailing the rally. April's job report strength may push the Fed to hold rates, but weak consumer data could spark rate cut chatter. For new investors, track big earnings to spot trends. Apple's results could move the Nasdaq. For experienced investors, the S&P 500's at resistance levels. Watch for a breakout above 5,600 or a reversal if trade or Fed news disappoints. That's the wrap on this week's market surge. From a historic S&P 500 streak to tech earnings and tariff hopes, the market's back on track, but risks linger. New investors consider a diversified ETF to ride the wave while you learn. Pros, stay sharp on earnings and Fed signals, and keep risk management tight. What's your play? Bullish on tech or bracing for a dip? Drop your thoughts below. If this helped, smash that like button, subscribe, and hit the bell for more. Watch last week's video to be fully caught up. Until next week, keep stacking gains and stay ahead of the game. Happy investing.